Hello? The New York Stock Exchange, which had been on an upward rally, showed signs of slowing down. The Dow is still up. The S&P 500 and Nasdaq Composite Index fell. The Nasdaq is down nearly 2% as we enter the earnings season. Stock prices are fluctuating depending on the performance of each company. In the market, Tesla and Netflix had some accidents. Dow chart won't be slashed easily, I told you this, but I'm expecting that you'll be able to see a kind and convergent. The Dow seemed to hold out well, with the Dow banking sector and the former Jones coming out well, and regarding economic indicators. The National Real Estate Association's June home sales fell 18.9% year-on-year. There's talk of 140,000 fewer units sold than expected, and there's a 9,000 drop in unemployment benefits. It came out to 228,000 people, but it was accepted that the interest rate would go up again next week. And Philadelphia's manufacturing index came out, and the PMI data came out, and it came out again with minus 13.5%. So it keeps coming out that the local economy isn't that big, and the Conference Board's leading indicator of the economy, which fell 0.7% again in June. And this year, it fell 4.2% over the past 6 months, but the situation has been going bad. Until the first quarter of every year, there is a possibility of a recession, so I was a little satisfied with the economic situation in the United States. We have to go to next week, but we have an FMC meeting next week. Now we're going to announce interest rates, and Chairman Paul will be interviewing you. I'm expecting to do it again in September, but I need to check the possibility of it, and the earnings announcement will be a fraction of the week. Google, Verizon, General Electric, General Motors 3 will be held on Tuesday, the 25th, and respondents from various industries are about to announce their earnings. And on the 26th, there's Meta, Coca-Cola, Boeing. On the 27th, there are companies like Amazon, McDonald's, Shell, and Intel, so we can't let go of the tension yet. Please check the announcement schedule before next week's performance. Netflix streaming company is a little below estimates. A lot of institutions have told me that it's going to be okay in general and that it's going to grow, but in Evercore, Web Inc., etc., they've set a target price of $500. But why did Bush raise it to $525 now? And I heard that cracking down on passwords will be okay, but Macquarie said something bad. Macquarie hit a target price of $410. In the future, the psychological things that came up will become bubbles and fall down. I was expecting this, but recently, Netflix has suddenly increased its policy plan not to watch ads to around $15 a lot. The market is talking about why we can't recover our short-term net profit in 2019, when demand for these things has already recovered due to the transfer of fandom. That's why they can't meet the eye level of the investors. So despite the recovery of the pandemic and further increase in demand, oil prices fell, and as a result, stock prices fell a little because of why the net profit in 2019 could not be recovered. In the case of Johnson & Johnson, they announced the results of discussing estimates and said they would show a very good performance. And the stock price was rising as they discussed all market expectations. We talked about Taiwanese semiconductors, and what's important about Taiwanese semiconductors is that Apple's electronic device sales have fallen for the second consecutive year. Apple will announce its earnings on August 3rd. I've selected some stocks that can be classified as representative value stocks in the industry that can grow. So, despite the talk of the recession, the medical sector is still coming out positive today, because it's evaluated that the downturn in the vaccine has already passed, and the vaccine again became like the flu. The medical industry and insurance companies are discussing this and saying that if you get the flu shot, you'll get very stable sales, so the medical market is going very positively. So, I brought a big hospital chain called HCA Holdings. It's a company that operates in about 20 states in the United States and the United Kingdom, with 180 hospitals and 2,300 outpatient treatment sites. There are surgery centers, hospitals, and emergency rooms in Dongducheon. There are centers that serve as emergency rooms. So, I have some centers like that, and I have psychiatric hospitals and other drug treatment hospitals. We've been seeing a very stable growth in sales for 10 years, and what's important is that the ranking is $19 per share. But the PER is only 14 times higher. So, you can say that it is a representative blue-chip stock in the medical industry with a very low reputation. And what is expected to be profitable is about $4.28%. This is expected to grow by 1.6% and sales are expected to increase by 5%. So we are currently maintaining our buy rating, and overall this year, we are expecting a net profit of 18.10 cents and sales of $63.4 billion. So we are expecting a growth of 7%, 5%. The financial structure is missing some expectations at the end of last year. But overall, we're meeting expectations a little bit, and our net profit is a little bit lower in 2022 than in 2021. However, it is evaluated that it is continuing to grow more than in 2019. And as the stock price has gone up a lot, it's decreased a little. But overall, it's maintained at $320 for the average purpose and $350 for the highest price. If you look at the chart using the performance season, it's going up really well. And you can see it's going up while maintaining the next generation, but it's slightly going down the next generation. So as long as you have this level on the 20th, the $280 section is seen as an appropriate buyout section. And you'd better set the average price of $320 in the short term, and set the loss short at $270 at the bottom. But in the long run, when you look at this stock, it's important to see if it's going to be $265, which is below $265. Because the overall market could move a little if it goes on until next week and August 3rd. So if you look at the line, and there's a concern about an electrical recession, you can even reach the bottom of the Bollinger Band and the trend line of 50 weeks. So if you buy it and look at it in the long run, it'll be a good profit. If you're making a short sale using the earnings season, you can take $280 as a buyout and consider the price target to be $320.